Many of you have asked me for an update on Adobe stock after the stock is down 38% year to date and another 8% in the after hours. The report couldn't be better. And the decline has nothing to do with the business, nothing to do with the fundamentals deteriorating, but it's only due to the sentiment that AI is killing Adobe. And if we look at Adobe's quarterly revenue growth every single quarter, Adobe has been, and it's still growing more than 10% every single quarter since 2022. And in fact, it has reaccelerated to about a 12% quarterly revenue growth for this Q1 of 2026. So if AI was killing Adobe, we would see Adobe decelerating in revenue growth on a sequential basis, on a quarterly basis, but that's clearly not happening. If AI was killing Adobe and there was much more competition on Adobe, Adobe would be spending a lot on marketing to market the products. They would be offering discounts, and that would pressure their operating margins. But if we look at the operating margins, they've been increasing. They haven't just maintained them, they have increased them from 36.5% to almost 38% operating margin, and they still have the same operating margin from June of 2022. So to me, the sentiment that AI is killing Adobe is insane. And I've been covering Adobe for more than 4 quarters. And every quarter, I'm like, maybe the next one is going to be lower. And it just ends up being higher on the revenue growth, operating margins, gross margins, you name it. It's only been getting better. So when is AI going to kill Adobe? We have a lot of new tools and a lot of decent tools, but they still haven't killed Adobe. Now, the report was actually amazing. They beat on earnings per share 606 versus 587. They also had a decent beat on revenue. It was a very good report in general. But unfortunately, the CEO decided to step down after they appoint a successor. And I believe this is the reason why Adobe is down 8% in the after hours. I think if it wasn't for that, the stock would have likely gone up on such an amazing report, because many other software companies have gone up on good reports, but Adobe unfortunately went down. But this is a big deal, guys, because this CEO has joined the company in 1988. Adobe was founded in 1982, I believe. He came in 1988, and he's been a CEO for 18 years, since 2007. So someone like that leaving the company is a huge loss. And of course, it's going to affect the market. Now, this person is 62 years old. Maybe he wants to retire. Maybe he wants to do something else with his life. So he's not really leaving Adobe just because the AI will kill Adobe. Maybe that's the case. We don't know. We can speculate. But if I had to speculate, I would speculate that he's likely leaving because he wants to retire or he wants to do something else, because he's going to remain on the board to support the new Adobe CEO. And that's really amazing from him, because based on what I read, this is pretty much what the co-founders did to him whenever he became a CEO. So he wants to return the favor and help train the new CEO on his position, and he's going to remain on the board. So that's not as bad as it looks, but the stock is down 8% on the news. Now, talking about AI, the company has mentioned AI 98 times in their earnings presentation. So that really tells you that they're not just ignoring AI. In fact, Adobe Plus Express monthly active users have grown 20% year on year. And as the Acrobat AI, or the AI business of Adobe, has grown annual run rate of 3x year over year, and more than tripled year on year. So the company is clearly benefiting from AI, and it's increasing their operating margins, and it's reaccelerating their revenues to almost 12% growth. So again, the sentiment is still not materializing with Adobe, and I think with all the advancement in Claude and ChatGPT and all kind of amazing tools, it would have affected Adobe by now. So I'm not really sure when that's going to affect Adobe. Now, if we look at the valuation of the stock was too expensive, to be honest. Used to trade at 50 times forward earnings, and it went from 50 times to 11 times. So this is a big difference. But 11 times earnings is too low for a company that's growing in revenues 11 and 12%. And the management believe it's too low, which is why they've been deploying capital to buy back their stock like never before. They've been buying 5-6% of shares outstanding almost on a 4 quarters basis. And they've been just reducing shares outstanding aggressively. And this is what they should be doing with the stock going down, although they also did some good acquisition. And I believe this acquisition will bring a lot of growth to Adobe. Now, Adobe, the way I would really value their stock is I would look at their free cash flow. It's about $10.3 billion. Okay, we take out the stock-based compensation of almost $2 billion, we end up with about $8 billion in free cash flow after stock-based compensation. Okay, now we look at the market cap is at 111 billion. After the 7% drop in the after hours, it's going to be close to 100 billion. So 8 billion in free cash flow after stock-based compensation and 100 billion market cap. This is about an 8% free cash flow yield. So in other words, you're buying a company at an 8% free cash flow yield. They can afford to buy back 8% of the market cap every single year. Not only that, but the revenue is reaccelerating to about a 12% revenue growth. Such opportunities don't come very often. When you're paying an 8, 9, 10% free cash flow yield, the revenue growth would be 1, 2%, 3%. It would be a low margin retail kind of business, but you're buying a high margin recurring revenue software business with 10, 11, 12% revenue growth at an 8% free cash flow yield. That's really cheap for the company. And if I had, again, to estimate a upside potential, I would use the 8% free cash flow yield plus revenue growth of 10%. This is an 18% annual return, excluding a multiple expansion from a depressed multiple of 11 times back to 15, 16, 18, 20 times. So minimum, I see 15 to 18% annual return from today. I think Adobe is very, very attractive today. And I think the reason why the stock has gone down has most likely to do with the CEO, but the fact that the CEO wants to remain on the board to train the new CEO, it's very, very encouraging, and I like it very much. And that was my opinion on Adobe stock. Hope you enjoyed it. It was not financial advice. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.